Have you ever wondered how to retire off Tesla stock in a few years? A lot of people believe that Tesla will allow them to retire early and still have a steady amount of cash coming by investing in the leading EV company's stock. Stay tuned and keep watching to find out how. When the pandemic hit in 2020, it hit hard. Many people lost their jobs and numerous business owners had to close down their businesses. Even Tesla, like other large corporations, struggled a lot at the time. Today, Tesla is starting to get back up on its feet, which is reflected in the company's stocks. Today, you will find out how to retire off Tesla stock in 5 years. Becoming a stock market millionaire may be a lofty goal, and it's something not everyone will be able to achieve, but it isn't impossible. By investing consistently, choosing the right investments, and keeping your money in the market for as long as possible, you have a better chance of generating long-term wealth. Investing in the stock market is one of the most reliable ways to grow your wealth over time. Investing in the stock market is one of the world's best ways to generate wealth. One of the major strengths of the stock market is that there are so many ways to profit from it. However, with the great potential reward also comes great risk. Darren Young, through his channel, recently gave an amount breakdown of how much you will need to retire on Tesla stock by 2030. He said that 300 shares is enough for him, and probably a lot of people, to retire by 2030. Most of us start investing with the goal of financial freedom, he said. He explained that a simple retirement may be possible with just $5,000 per month, which requires around $2 million for a 30-year retirement. Young said that there are different factors to be considered that may well affect this plan. One is inflation. He said that with an inflation rate of 5% per year, after 15 years, $5,000 will have the same purchasing power as $10,000. He explained that this could be offset by having various sources of income, like continuing to invest in Tesla stock and/or occasional paid work. Although different people have different needs, $2 million is a number enough to satisfy the needs of most people. Of course, note that people have varying needs and lifestyles, which is what will affect the rise or fall of the said amount. Using the bear and bull cases, Young calculated what Tesla's stock price will be worth by 2030, given that Tesla CEO Elon Musk expects to sell 20 million vehicles by that time. With the bear case scenario where Tesla sells only 10 million cars, the average selling price would be $60,000, which is close to what it costs today. He said that although Tesla may well possibly release a few more affordable models at around $30,000, this would be offset by a few factors. The first one is the much-awaited Cybertruck pricing. The Cybertruck will cost significantly higher and is predicted to be around $80,000. Note that this is the bear case scenario. Another factor is inflation, which is higher today at 5% per year, which has a significant effect on the overall economy. By 2030, autonomous driving is expected to be largely solved by Tesla and other companies. It can be noted that Tesla recognizes FSD revenue under automotive revenues. This implies that by 2030, assuming that the selling price for Tesla's hardware is $40,000, they may recognize $20,000 as an FSD revenue, which is equivalent to an estimated average selling price of $60,000. In a bear case with 10 million cars multiplied by the average selling price of $60,000, to calculate automotive revenues is equal to $600 billion in revenue. Assuming that Tesla's non-automotive revenue stays the same at 15%, it is equivalent to another $90 billion in revenue. Overall, Tesla's total revenue will be $690 billion. Again, assuming that the net income stays the same, that is equivalent to a total net income of $104 billion. To calculate earnings per share, the net income is divided by total stock available in the market, which is around $104 billion in income, divided by 1 billion stocks, which are equivalent to earnings per share of $104. Now, to calculate the share price, the earnings per share of 104 is multiplied by a price-earnings ratio, using Apple's PE ratio of 30 for the sake of computation. By 2030, in a bear case scenario, Tesla would be a mature company with a stock price of $3,120. Moving on to the base case scenario, there are slight changes in assumptions. First, assuming that annual car sales increase to 15 million per year from 10 million per year. That is still a little short of Musk's goal of delivering 20 million vehicles by 2030. Next, net income increases to 20% from 1%. Do you think you can retire from Tesla stock in 5 years? Let us know in the comments section below. Today, Tesla has a 15% income while ramping up production in the Austin and Berlin factories. When the fully ramped up gigafactories and higher margins from software become a bigger part of Tesla's revenue, Tesla may well possibly increase its net income. In a base case, 15 million cars multiplied by every selling price of $60,000 is equivalent to an automotive revenue of $900 billion. Assuming the same mix of non-automotive revenue at 15% is another $135 billion in revenue. That said, Tesla's total revenue will be slightly north of $1 trillion. With a net income of 20%, there is a net income of $207 billion, so earnings per share calculation is $207 billion divided by 1 billion stock is equivalent to $207. That said, the share price would be earnings per share multiplied by PE, or 207 multiplied by 30 PE, which is a $6,210 share price in a base case. Finally, the bull case scenario. Again, there will be several changes in assumptions compared to the bear and base scenarios. Here, Tesla will deliver 20 million vehicles per year, which is in line with Musk's goal. Also, Tesla's non-auto money revenue will increase from 15% to 30%. Lastly, Tesla's net income will increase to 25, which is the same as Apple's net income today. In the bull case scenario, Tesla has 20 million cars multiplied by the average selling price of $60,000, which is equivalent to a total of $1.2 trillion in automotive revenue. 30 non-automotive revenue would be $360 billion extra. Overall, Tesla's total revenue will be $1.5 trillion. A net income of 25, which is similar to Apple's today, is $390 billion in net income. Earnings per share is $390 billion divided by 1 billion stock, which is equivalent to $390. Moreover, Tesla's share price of $290 is multiplied by 30 PE, which is equivalent to an $11,700 share price in a bull case. Note that these are conservative calculations. Tesla's price-earnings ratio is 100 today, which is more than 3 times the 30 PE used in the calculation. That said, if the PE ratio went up from 30 to 60, share prices in all 3 scenarios will double. On the other hand, if the PE ratio went from 30 to 90, still less than today's 100 PE ratios, all share prices in all 3 scenarios will triple. Moreover, Tesla remains to have growth hit room in average selling price and margins. With all the calculations done, let's now calculate how many Tesla stocks are needed with a retirement goal of $2 million by 2030. In a bear case scenario, with Tesla's stock price being more than $3,000, around 650 stocks are needed. In a base case scenario, with a Tesla stock price more than $6,000, around 300 stocks are needed. In a bull case scenario, with the Tesla stock price of more than $12,000, around 150 stocks are needed. Again, many people have varying needs, wants, and lifestyles in general. Because of that, different people may require different amounts for retirement. When deciding whether or not to invest in stocks, there are several things to take note of and several steps to undergo. The first is to plan. It is important to understand that unlike mutual funds, investing directly in shares comes with its share of risks and gains. Make sure to plan and determine a capital amount before investing, as it is a slow and constant process. While deciding which stocks to invest in, determine your loss-bearing capacity per trade. Next is to understand the market. New investors must understand that stock market fluctuations cannot be predicted. Even seasoned investors can't always accurately predict market behavior. It is important to understand how markets operate. If one day a stock price goes up, there are chances that the bid price might dip the next day. Therefore, it is important to understand the factors that influence the stock market. Also, be realistic. Amateur investors often expect higher returns immediately. Making achievable financial goals is the first step toward making informed and strategic investments. Furthermore, avoid schemes that promise high returns in a short period of time. Before you invest, make sure you do thorough research. Finally, start simple. Many young investors go overboard when strategizing and purchasing stock. To maintain financial stability, one must keep things simple. Keep your analysis as simple as possible. As previously stated, the stock market is a volatile environment. Instead of panicking over the stock's performance, you should develop a broad strategy and stick to it. Visit Tesla stock and watch our other videos for more of this content.